So it's reporting day at Clariant. Good to see you, Conrad. Hello.
Yeah, great to see you, Kai. Hello.
Conrad, earlier this year, we reported full year numbers for 2022, which was a record year in terms of sales growth. Now we're reporting stable top line growth. So what's the reason behind it and where do we stand here?
Yeah, when we reported our record sales for last year, earlier this year, we also saw already a slowdown in the third and the fourth quarter last year. We gave an outlook whereby we said the first half will be very much a soft recessionary environment, whereby the real pickup will be in the second half of the year. That is very much what indeed we've seen happening in the first quarter.
So when we're talking about this environment, we also use the term soft recessionary environment. However, global GDP is not technically in a recession. So why is it that we are using this term recessionary environment for Clariant specifically?
No, you're right, Kai. We're technically not in a recession when you look at our global GDP. Also not when you look at the different breakdowns of GDP by region. Now, if you look at the components of GDP, and if you compare what we're spending on services versus durable products, we are actually in a recessionary environment in the segments where we are competing. Just as a reminder, in Corona times, we were spending lots of times in our houses, spending lots of money actually on durable goods, new cell phones, new computers, new appliances, new furniture. If you now look at the post-Corona recovery, we spent much more time outside our homes, going out into restaurants, traveling, which is good. But these are unfortunately not the segments where our products are going.
Which means our volumes are obviously down. Now the second component is pricing. Where do we stand here now in volumes versus pricing?
Yeah, I was very pleased to see that our pricing is up 7% year on year. So this actually compensates the 7% reduction in volume that we saw overall, which means purely looking at organic growth, we had a very resilient performance. Our sales came in overall in the first quarter at the same level as it did a year ago in the first quarter of 2022. Then on top, we have the contribution from our recent acquisition, the BASF Attapulgite acquisition, which then results in an overall growth of 1% of our sales in local currency versus prior year.
So Conrad, while indeed we reported stable sales, it was obvious that our margin has suffered quite a bit with a sharp decline. Could you explain what led to this decline in our margin?
Yes, Kai, our margin declined from 17.4% in a very strong quarter last year to 13.9% in the current quarter. I already mentioned the volumes, the -7%. We also did see some negative mix impacts. Some of our most profitable businesses, like for example, our additive businesses, declined actually most compared to prior year. On top of that, we had two extraordinary items. First, we had a revaluation of the stake that we have in the SK Heubach Pigments business, our 20% stake. We had to book a revaluation based on their trading last year, and that had a negative impact in the quarter of 11 million Swiss francs. Secondly, we had a loss in our biofuel business of 13 million Swiss francs. This is sequentially coming down from the loss we had in the fourth quarter last year, where we recorded a loss of 20 million. So we are seeing some improvements, and we expect a continued improvement in this, especially in the second half of this year.
Yeah, Conrad, another topic are costs. One of our biggest spenders in raw materials. What are the recent developments here regarding the raw materials we're purchasing?
If you look at our raw materials, Kai, year on year, we're still seeing an increase, roughly 3% increase versus last year in the first quarter. What is good to see is the sequential decrease from the fourth quarter, where our raw materials are down by 4% compared to the fourth quarter last year. We see a similar effect in our energy costs. So it's fair to say that the peak inflation on the raw material side is behind us now.
Okay. Yeah, so to conclude, maybe let's also take a more detailed look at each of our businesses you mentioned. So it's a mixed picture. So the environment is still volatile. So what does that tell us about the performance of each of our business units?
Yeah, the performance is, as you say, mixed across the company. Let me start with the strong revenue growth that we saw in our catalyst business. We saw an 18% revenue growth year on year in catalyst, comparing in catalyst actually versus a slightly weaker quarter in the first quarter last year. This is a good momentum. It started already in the third and the fourth quarter last year. We expect a continuation in catalyst of the strong growth into the coming quarters based on the strong order book we're seeing in catalyst. If you look in Care Chemicals, we had a -2% revenue decline versus the very strong quarter that we had in Care Chemicals in the first quarter last year. If you look at the performance, we see weakness in the industrial segments. But we also see some weakness in the consumer-facing segments where we see still a level of destocking, which was going on in Europe, in the US. We do see for the coming quarters that destocking is largely behind us. There's still a little bit to go in the US, but in Europe, this is certainly behind us. In Asia, it was never a real big factor. So we do see sequentially a pickup in Care Chemicals, especially in the second half of this year. Finally, in Adsorbents and Additives, we saw strong sales in adsorbents, especially in North America for the markets of purification of biodiesel. But we also saw double-digit declines in revenues of our additive business, very much affected by the declines for consumer electronics, but also the negative build rates in the first quarter for electric vehicles in China. We do expect this to rebalance in the coming quarters, and certainly for electric vehicles, we do expect a pickup in the coming quarters.
Yeah, thank you for sharing these insights, Conrad. And now to wrap it up, what does this all mean for the outlook and especially for guidance for the full year 2023?
Yeah, we confirm the outlook for this year, which means we will see continued weakness in the second quarter as we guided for before. But we still see this pickup in the second half, and we expect to end the year with a revenue level around 5 billion Swiss francs. In terms of profitability, we expect to end the year slightly above the profitability that we achieved last year, which was the 15.6% EBITDA margin. This, again, is built on a pickup of the business in the second half of this year.
Thank you very much, Conrad, for your time, and wishing lots of success for the next quarter.
Thank you, Kai.